Hey guys, Don Durrett, Gold Stock Data. I did a top 20 silver stocks. It ended up being 22. And now I'm going to do a top 30 gold stocks, but it's actually going to be 33. So you can see 33 stocks. I tried to fit it into 30, but I tried to eliminate three and I couldn't find any to eliminate. Um, and if I try to do 20, there's not going to be a lot of difference between the 20th rated stock and the 33rd rated stock because it's really difficult to know what who's going to be the winner, who's and who isn't going to be the winner. So the way I invest, I'm always trying to buy stocks that I think have the potential to be winners. So that's what this top 30 gold list is. These are stocks that I think have potential to be winners. You should all know my investing strategy, which is to focus on future gold and silver prices. So I don't really care about the next 12 months. The chances are I'm not going to sell any stocks in the next 12 months because I'm focused on much higher gold and silver prices. So I'm always looking at 24 to 36 months as kind of my kind of baseline, but I go further than that. I can go all the way out 5, 7 years. But generally, I never look out 12 months. But once gold gets above 3,000, then I might start looking out 12 months because I think the game changes. We'll get above 12,000. So that's a quick overview of my strategy. So now we're gonna go down the list. It's in alphabetical order. So we have the upside, downside, and quality ratings. And then we have risk. These are, the ratings that I assign to these. So three is anything is green is a top 25. My top 25 list currently has about 35 names. I changed it from a strict 25 number to any stock that I think um, passes a test. So the test is high risk reward with five bagger or better potential. If it has that, then it gets on the top 25. If it's green, then it's not quite ready yet. The risk reward isn't quite good enough to be on the top 25. They're kind of waiting to get a little bit better, and they get a little bit better. And when I get down to these ones that are blue, then you'll see I'll tell you what it needs to basically get on to become green and get on the top 25. And then if it's black, it's not quite good enough to be a top pick. The blues are top picks, greens are top 25, and the blacks are not quite ready yet. And then three is possible five bagger, four is possible 10 bagger or better, and 3.5 is a likely five bagger. And then on the quality rating, on the downside, 2.5 is marginal. So it's kind of, it's marginal risk reward. It's not quite good. Three is a good risk reward, and 3.5 is an excellent risk reward. And then I added these quality ratings to give us two ratings for risk reward. So because what you're going to see is you'll see some with threes and have an A minus or a B or a B plus. And then a 2.5 could easily have a B minus or even a C plus. So these give you a secondary number um, telling you basically the quality of the risk reward. So anything that's a B or better is I consider good. So B is very good, A is excellent, and then A minus is almost excellent. And I don't think I give out A pluses. So A is basically as good as you're going to get, which is excellent. Almost excellent, very good, very good. Okay, and then we have the risk levels. Moderate is it's kind of a equivalent of low. No, I wouldn't. No, I'm sorry. Some is the equivalent of low. Moderate is almost it's high risk, but not quite high risk. Let's put it that way. Um, so um, bottom line is just about all these stocks are high risk. there's no really such thing as a low risk stock. So I got rid of low and I put some. So there's definitely some risk. It's not a low risk. Um, so I needed to get rid of low, and my webmaster, he came up with the word some, so I agree with him. Okay, use some. It's not the best word, but it gives me the ability, because I didn't want to use low, so I use some. So like Free Gold Ventures, I don't I think it probably, as far as risk goes, if you hold this stock and gold prices go up, I think the risk is fairly low. So I have it as some, and then if a company, if the risk, if they kind of check all the boxes, then I'll have it moderate. A company like Newmont or Barrick or some of the majors, I'm going to have moderate. So Dundee, the reason why they have moderate is because they have low cost and a good balance sheet. So if we look at their balance sheet, they have $650 million in cash and no debt. So, and then their multiple is a five. So they basically have excellent free cash flow. So if we come over here, so we look at their margins, they have almost a $1,500 margin per ounce right now. So they're just generating a boatload of free cash flow. So when you combine the balance sheet with their margins, um, that's the reason why I have it as moderate. But if they have problems at one mine, doesn't matter if it's moderate, one, you never know about these unexpected problems, right? But but when I look at it as moderate, then I know, okay, this company has good margins and a good balance sheet. It's kind of what moderate is going to tell you, and that the location isn't mining unfriendly. That's another one that could bounce up to high. The one thing you won't see on this list is any companies with extreme risk. That's the one that I use. The other one I use. There's the four that I use for risk. Okay, we can start now. So we've basically used 10 minutes on intro. So I'm gonna go fairly fast because we have 33 names. I'm not gonna spend more than 2 minutes on a stock, and several of these stocks I'm probably gonna spend less than 1 minute on. So the first name is Dundee, and Dundee's kind of a no-brainer. Mid-tier producer, $1.8 million market cap, um, cheap. Printing it as a five. I don't have it as a 3.5, but I wouldn't be surprised. Let's go and take a look at Dundee and see what it currently prints as. What the database is showing. It's showing 7-Eleven upside at $4,000 gold, but it has to grow to get that this 700. It's got to increase production from 260 to 500. So it's not a slam dunk five bagger. They have some growth that they have to do. But you can see here where it's 381 free cash flow at current gold prices, trading at a five. So I wouldn't call it, it's not a slam, it's not a likely five bagger, but it's generating a lot of free cash flow. So these are the kind of companies I want to own. Um, Next one, Eldorado. Dundee, by the way, is in Eastern Europe, but they're trying to expand. They were trying to buy a mine and another. They were trying to expand recently, and a Chinese company outbid them, which would have been a really nice acquisition. I can't think of the name they're trying to. So they're trying to grow. Dundee is definitely. They have all that cash. They're probably going to do buybacks. They're probably going to do dividends. So Dundee is, for me, is kind of a must-own top 15 name. So any of these. So we have 30 names here. Anyone that's a top 15 name, I'll let you know. Dundee's definitely, I would put that one top 15. Eldorado, they have some mines in Turkey, which adds risk, but they are generating nice margins. So, it's not quite it's just over the major threshold. So let's see what I have it at. I have it as an M as a major. So 3 billion is what I use for major cutoffs. So they're 3.2. So they are at the majors. So if we look at their free cash flow multiple is about a five, so they're very cheap. And then if we look at their margin is about $1,100, so not bad. Any margin that's $1,000 or higher is, I think, excellent. Even 800 is very good. So you could say 750, 800 is very good. 1,000 is excellent. So $1,100 margins for El Dorado. Um, so the only issue here with El Dorado is going to be um, the location risk. If you're okay with Turkey, environment in Endeavor Mining, um, major, almost 5 billion. I have it as a five bagger, A minus, because really strong management team. Balance sheet, they have 1.3 billion in debt, and I don't care. I still have it as an A minus because they generate a lot of free cash flow. They're trading at a 3 multiple, which is crazy, right? For a company of that quality. $1,200 margins. So when they have $1,200 margins, so I have their ASIC is about 1,100, and their break evens I have 1,500. So there's not that many companies that have $1,100 ASIC. The reason why they have low ASIC is because they're in West Africa, and it's basically all open pit mining in West Africa. So you have the risk um, of politics in West Africa. So I definitely so I have it at high risk, but I still have it as an A minus. Maybe they deserve to be a B plus, but I think that the A minus is kind of their management, which is top notch. Uh, Next one's Equinox. So Equinox, I have them. They're not a top. I have them as a 2.5 because they have high cost right now and high debt. So I have them as a B. I don't have them as a B minus, but I think their costs are going to come down, and I think that Ross Beatty's the chairman, so I like that. I think they're a turnaround story. I think they're going to be a shark. So their balance sheet isn't great. $1 billion in debt, 200 million in cash, trading at a 5 multiple. I think I think these companies, most of these high quality names, are going to end up trading at 15 multiples. So the multiple expansion is pretty huge. So Equinix, you have to decide, if you're going to um, the cost, if you're okay with their cost. Like right now, their their margins are only 769. So their break even is about 2,000. But I think this is going to come down to 1,800. And so if it comes down to 1,800, they'll be in okay shape. But they're still a high cost company. I'm really kind of betting on Ross Beatty, um, building this company, just keep growing the company. And so I'm kind of betting on him. Fortuna used to be a Fortuna Silver, but they've moved into gold. They sold their San Jose silver mine just recently, like last month. So now they only mine 1 million ounces of silver, which is nothing. And they mine 375,000 ounces of gold. So they're a gold miner, but they're in West Africa is where they're growing. I have them as a B plus, not quite an A minus. They're not slam dunk five baggers, so I have them as a 3. But I'm okay with West Africa. If you're okay with West Africa, I think Fortuna it looks good. Um, Free Gold Ventures, this is just a pure exploration. All we're doing is betting. You're buying the gold in the ground for $10 an ounce. And we're just hoping that Eric Sprott, he owns 29% of the company. We're hoping that he won't sell for less than 100. So they're just going to sit on it and drill for like 2 more years. I think they're 30 million ounces right now. I think that'll expand to 35. A lot of people think it's going to go to 40. So if we use 35, it's actually cheaper than, so it's at $10 an ounce at, at 30 million ounces. So if they get to 35, it's cheaper. It's more like $9 an ounce in the ground. So that's why I have it highly rated 3535A, because I just think that I think if it looks like a five bagger all day long, is long because they have 50% ownership, but this is private investors who are not going to sell. And I think once gold gets above 3,000, people are going to start knocking on the door because there are not very many 30 million ounce mines out there. So Kinross is right next door. Kinross is going to bid for sure. And who's going to bid higher? So I think the hard part's going to be getting free gold from $10 an ounce in the ground to 50. which is about a three bagger. But once it gets to that 50 level, it could easily double to 100 in a month because companies don't mind, once it's at $50, they don't mind, going into negotiation and bidding up to 100, but they won't go from 10 to 100. But going from 50 to 100 is very doable. G Mining, um, this company you're probably not aware of, but they were always mine builders. They weren't developers, and then they changed and they built their first mine in Brazil, and now they're building their second mine in Guyana. And so the thing I like about G Mining, like I said, they're mine builders. They know how to build mines very quickly. They know how to, and so they know, and I think they're going to know how to operate them as well. This is and their costs are low down in Brazil. They're going to use that, leverage that to, pay down their debt. So if we can look at their debt, they only have 100 million, but they're going to be adding to build a second mine. But they have some cash. Their multiples at 8, so it's not super cheap, but it's a growth story. So I I'm a fan. I think G Mining is kind of under the radar. I think it's going to end up. I think they're going to turn into a major. They're 2 billion. I'm confident they're going to turn into a major. They're going to. I'd have them as a five bagger, so you get to 10 billion. Genesis, Genesis acquired Santa Barbara's projects in West Africa, and so now they got a lot of gold, um, and I have them as a 3.3 B plus. Um, you know, Turning into a major. The thing I like about Genesis is I like their balance sheet. I like the location of their mines. They're one of the Aussie eights. I put them in the top 15. So it's 100 million in cash, no debt. But look at all the gold they have. They have 15 million ounces of gold. So I like that. They're a 200,000 ounce producer. I have them growing to 350 with with about $1,400 ASIC. So these West African companies, I'm a big fan. I think that Genesis is basically a growth story. I think the multiple is going to blow out. I think the multiple will get to 15. I like these Aussie eights. The Aussie eight is the eight best mid tiers in Australia. Gold Road is another one that's an Aussie eight. I only have it as a 2.5. In order to be blue or green, you have to be a 3. So Gold Road right now is a little pricey. People are probably going to pass on it, but I want to own these quality mid tiers in Australia because I think they're going to all merge together. Heliostar, they're in Mexico. Um, they're ramping up production. They have two mines that they're going to bring online, and then they have Santa Paula that they're building. It's a growth story. I like it a lot. I have it as a 4.35 B plus, so it won't turn into an A minus for a while. I have it as high risk because they're building these mines. But Heliostar to me looks really good. They became a producer because they uh, bought a producing mine down in Mexico. They got Argonauts, all of Argonauts Mexico properties. They paid $10 million for all of Argonauts Mexican properties, which is just unbelievably cheap. Plus, they have Santa Paula, and they have another mine in Alaska that they're drilling out. I think, gonna be a fairly large gold mine. Hochschild Mining. Um, I'm a big fan of Hochschild. Hochschild focuses mainly in Peru, but they have two gold mines also in Brazil. So they're basically Peru and Brazil. Very cheap right now. Prince's are like a 12 bagger, which is absolutely insane. Um, they've sold off because they had a little miss. I mean, it wasn't even a big deal, and it sold off. So you can see in November it was at 1.3 billion. Now it's at 1.5. Um, they have high insider ownership, 50%. So they're not going to sell. Balance sheet 360 million. Um, so the current multiple is less than a 5. They have a lot of gold, 15 million ounces. They have 200 million ounces of silver. Um, so if we look at their current cost at 1950, a little high, but I if you can get gold and silver both, they're kind of like a Coeur Hecla kind of twin. But this thing's printing as a 14 bagger. It's absolutely insanely cheap. But that's a little bit of growth, but not a lot of growth. I have it going from 8 million ounces silver to 9, and gold going from 250 to 300. So it's not a lot of growth to get to 14, to be a 14 bagger. I have their free cash flow currently at 240, and they're trading at a 5 multiple. These multiples are just ridiculously cheap. Basically, investors don't believe that gold prices are going to stay up. But look at this future gold, future free cash flow at $4,000 gold. It's $1.2 billion. What are they going to do about all that cash? They're going to buy back shares. They're going to pay a dividend. So Hochschild to me looks fantastic as a risk reward stock. International Tower Hill. This is a development story in Alaska. They're waiting on their permits, but they've been making progress. Once they get that permit, this is going to turn green. So you want to look at these stocks. I don't have a green now because it's not permitted. But once they get that permit, it's turning green. They have high insiders. I think Paulson owns like 50%. They're not selling this thing to the majors. They're going to build it. It's a large gold mine in Alaska. It's in a good location up by Fairbanks. Um, I've always had my eye on International Tower Hill, and then I bought it when it got really cheap. I think I bought it when its market cap was like under 80 million. Now it's at almost 100. Um, I don't think it's going back to 80. Jaguar, I have it as a 4.3 A minus. They recently had a problem, but I don't think that, the thing about the problem is the legal issues. They're going to get sued. They're going to have to, they're going to have to pay out. um, a lot of people don't like Jaguar because the stock hasn't done well in the past. And I always say, do not look backwards, look forwards. Jaguar's mine, they have a conservative management team. I've really never liked that. They basically drill very slowly, very carefully. They don't dilute shareholders. They're very methodical, but they have two mills and two mines, and the mills are only 50% capacity. So they're going to take both of those mills to full capacity. They're going to take their production up to 150,000 ounces. So as a 150,000 ounce producer, I think that's going to take them, north of 1.5 billion, and they're currently at 1.2, 120,000. So I think they're a 10 bagger. They're not a 14 bagger like Hochschild, but I think they're a pretty solid 10 bagger. Now their costs are going to come down. A lot of people don't like it. You know, they only have 46 million in cash. They're probably going to dilute you. If you buy the stock today, they're probably going to dilute you because 46 million isn't going to cover their legal bills, because they definitely they damaged some houses down there and they have to fix their tailings, where they had their tailings. But I don't think that's going to be an issue fixing the tailings. The issue here is the legal bills. They're trading at a two multiple, a two, which yes, that's right. They're trading at a two multiple. So, and Jaguar, I really like their drill results. So, I put Jaguar in the top 15, even though people will say, they don't like it, they won't own it, but I'm fine with it. I'm definitely putting Hochschild and Jaguar on the top 15. K92, it's just been a thing of beauty. I mean, all K92 does, all they do is find more high grade gold. It just keeps growing and growing and growing. They said they're going to be drilling this thing for 10 more years. This is going to be a 500,000 ounce mine. Currently at 250,000 ounces, but it's never going to be a high cost mine. So their costs are going to come down. Like right now, trading it at a 10 multiple. The reason why is because they're growing production. But I don't mind paying a 10 multiple because it's just going to keep growing. So the margins right now about $900. I think 1850. So their ASIC right now is about 1500, 1450. Let's call it 1500 ASIC. I think that ASIC is going to stay there. Might comes down because their head grade's about 8-9 grams. Um, so I got them at about 9 gram head grade. And so this thing's going to grow, production 400,000. No, that's not right. Yearly, like four. Yeah, these are millions. 250,000. I'm confusing myself here. Yeah, I'm looking at line one, K92, 180,000. I guess they're at 180 right now, but they're gonna get to 250 soon. So K92, yeah, I'm a fan. Top 15, yeah, I'd say top 15. Line one is more of a speculation bet. I have it as a 4.3B, so I don't have it as a B plus, and that's what, and I have it, I don't have it as high risk, but I do think this thing, if we look at their valuation, currently valued at 93 million. I do think this is going to be at least 150,000 ounce producer. So they're currently only mining, I think like 20,000, 30,000 ounces a year. But what I like about Lion One, this one would not definitely not be in the top 15. It's a speculation stock, but I can't leave it off here because I really like their drill holes. If we look at these drill holes, you know, 88 grams at 5 meters, 27 grams at 5, 20 grams at 7, 16 at 9. The drill holes have been outstanding and they're drilling all over the place. So we look at all these targets. This is a really big mine. And the guy that's the chairman who's drilling this out, he's had really good success at finding these big mines. And he thinks this is another one. It's 50,000 acres, and it's most of the gold that they're going to find is basically high grade underground mine. And so it's not easy finding underground mines, from the surface. It takes time, but 76 meters at 21 grams is just phenomenal drill hole. So the current deposit is only 800,000, but I think this thing's going to grow, um, 3 million plus ounces. So it's kind of a bet. This is the CEO, Walter Burkoff. He's sold two mines for like $1 billion. And he really likes this one. He thinks this is another $1 billion mine. But he's at an age right now, he's an older guy, that he's not going to sell this thing. He's taking this thing as far as he can take it. So it's a speculation bet, but I'm putting it in my top 33. Montage, this is in West Africa. Hasn't It's gotten expensive, 575 million. When you really wanted to buy this thing, closer to, 300 million. But even at 575, this is a really good property. They might dilute us down. My 10, might be a little bit aggressive, but I think, uh, they're going to add some debt. Oh, are they going to add debt? I think so. I think yeah, they are. They're going to add a lot of debt to build this mine. One bad thing about this Montage deal is it's going to take them a while to build it. It's a really big mine, so we're not going to get any production, I don't think, until 2027. Um, so it's kind of a long wait. It is a long wait uh, before we're going to get this thing in production. But it's a really good property on 500,000 acres. So they already have 5 million ounces growing in size. They're going to find 10 million ounces. So this is a 10 million ounce company, in my opinion. It's a $900 million capex, but it's already fully funded. But they use a $700 million streaming deal. That's a lot for 23% of production, but that way they didn't dilute shareholders into the ground. But they're really strong insiders. The Lundin 20%, Zenjin 10, Barrick 5, Management 5. So they're not going to sell. Major is going to probably try to come in and take them out. They won't be able to. They're going to say, no, we're going to mine this ourselves. So currently at 6 million ounces, like I said, I think it's growing to 10, but I'm only valuing them as a 300,000 ounce producer at 6. I think I took a little off because 20% is going through that streaming deal. I think they're mining about 400,000 ounces. But at 300,000 ounces, they could generate 750 million in free cash flow. So it actually prints at a 14 bagger. So I said, it's marginal 10 bagger, but the numbers kind of work. Um, at $4,000 gold. So if we look uh, at their cost, what they're expecting, I have them at 1,500, so I have them about $1,100. Remember, it's West Africa, low cost open pit mines. I have their AISC at 1,100. So even if you bump the AISC to 1,200, it's still going to be generating, 600 million in free cash flow. So Montage looks, if you don't mind West Africa, it looks pretty good. Um, I think it's Burkina Faso. Let's go and look at the location. Um, no, it's in Cody. I think Cody's even better than Burkina Faso. Cody, to me, is one of the better. So far, it's been one of the better uh, countries in West Africa. So I'm okay with Cody. So I like that. Next goal. Um, Next goal is one of my favorite development plays. So I wouldn't put Montage in the top 15. I would put Next Gold. And the reason the difference between these two companies, I have Next Gold as an A minus, which is a really high rating for a development play. And the reason why is because it's a very advanced project. It actually is not as advanced as Montage. Montage is already funded theirs. Next Gold hasn't, but they're valued at 80 million, and they have really strong insiders at 4%. So they're not going to sell. So does Montage. They both have strong insiders. It's one of our check boxes, right? So, but they don't. They have a pretty good balance sheet. They don't have. They only have 11 million in debt, 70 million in cash. They're really close to getting this thing permitted and built. Initial capex 430 million, which is pretty high. Um, so let's go and take a look. So the thing I like about Nextgold is the location. So I believe it's in Ontario. So we have this Goliath Gold Loan project in Ontario. So it's one of the better projects in Canada, and they're basically giving this thing away. I mean, look, $80 million is just crazy, and they only have. I mean, the share structure is pretty good. 185, 141 with 40% insiders. So here I say it's silly cheap, which I think it is. This is both of these mines are pretty big. I don't know which one they're going to build first. Or if they're, yeah, because there's two separate mines. Um, I think they're going to build the one that gets permitted first. So they're both of them are supposed to be permitted this year. Frank Gustra is one of their strategic investors, and they're not going to give this thing away. So, we're looking at a lot of free cash flow in a good location in Ontario. There are not a lot of independent mid-tier producers in Canada, and I think these things are going to get extremely large multiples. They just acquired Signal Gold to go with their Goliath Goldland, and they stole this thing. I mean, it was unbelievable. So basically, what Signal realizes that, okay, if we merge with NextGold, the combination, and it was a merger a friendly merger, so there was no premium. And at the time, Signal Gold was valued like $20 million. So they're like, okay, these guys can help find this, finance it, and we're going to get a 10 bagger. So the shareholders aren't going to lose anything because Nick's coal is cheap. So what they did was they decided, why don't we merge with another company that's cheap that can advance our project, and we'll do it as a merger of equals. I mean, it was just really smart. This is the third excellent merger of equals we saw. We saw Silver Lake and Red 5 merge, and we saw West Gold and Karora merge. That's three mergers of equals that all benefited shareholders. And I owned all six stocks, so it worked out well for me. Um, so yeah, let's see. I was going to see which one they're going to build first. Yeah, so this is one of my favorite development stories, and definitely top 15. Next one is Orgold. Orgold, it's not a top 15, but I have it rated pretty high, 4.3 B plus. They're expanding production in Burkina Faso. And so And like I said, in those places, it's open pit mining, shallow, easy to expand production, and that's kind of what Orezone's doing. So I mean, it's a 10 bagger with low cost, and it's a growth story. And so if you don't mind West Africa, I think Orezone look makes good. Orla. So Orla, I've always liked Orla. It's kind of like reminds me a lot of G Mining. I really like the management team. I think you know, the reason why it's not green is because they're building these mines. They just did an acquisition, so their production right now is kind of low. I mean, if we look at their valuation, $2 billion company, and they're not producing very much at this time. So, but they have 50% insiders, which I like. I like the management team a lot. Um, their balance sheet is one of the reasons they have 600 million in debt and only 90 million in cash. They're trading at a 5 multiple, so they're still super cheap. Um, the cost $1,300 margin, so they're generating a lot. So um, I want to own as many mid tiers as I can get my hands on. And so Orla fits that. I see Orla kind of like in the G mine. I see these as these growth stocks. There's not a lot of gold miners that are, I consider growth, aggressive management teams that are growth stocks. And Orla is one. And so, I mean, right now they have a lot of gold, 15 million ounces of gold, but they're generating 300,000 ounces of production, and their AISC is about 1,100. So they're generating their $1,300 margins. So they're generating a lot of cash. And I mean, so 400 million in cash with this, plus it's a growth story. So at 300,000 growing to 500,000. I don't think they're going to stop at 500,000. So it prints about a 5 bagger, not quite a six. If they grow to 500,000 and we get to $3,000 gold. But I think what I like about Orla, I like the management team. Um, this is a company that's going to grow. So they have this next project, South Railroad in Nevada, that they're working on. Um, so yeah, big fan of Orla. Top 15, yes. Um, Next one is Osisco. I'm hitting the wrong things. Um, Osisco Development, not a top 15. I've always liked the project that they're building in Canada. Um, it's a high grade underground mine. It's going to have really good economics. It's I think I'm forgetting if it's permitted or not. I've been following this project. Originally, Osisco Royalty bought this project, and then they gave it to a Cisco Development. They spun it out into a Cisco Development in 2020, and so Cisco Gold Royalty owns a big chunk of it. It's called the Caribou Project. There's 4.5 million ounces with really good head grade, so it's a long life underground mine in a good location. This is one of those ones that the majors want to own, but they have strong insiders, so 35%. I don't think they're going to give it away. Um, Plus, this mine has a lot of surface gold, which they've never drilled. The previous company did. The previous who Osisco Royalty bought it from, they were focusing on the surface. There's like 10 million ounces of 1 to 2 gram gold on the surface. If Osisco Development ever decides to start drilling for some of that surface gold, that's going to be really interesting. Now, the problem with Osisco development is it's a long wait. They're not going to get into production until 2028. So it's a 3-year wait for this stock. So a lot of people are going to pass on it. But this is a company that project that I followed for a long time that I want to own. And then the Trixie mine we're basically getting for free. So I think that the Caribou mine is worth $350 million. And the Trixie mine, I mean, it's 4.5 million high grade gold in Canada. It's definitely worth that. Trixie, they're drilling, they paid a lot for it. They paid 170 million. And so they think it's got at least to have 1 million. You wouldn't pay $170 million if you didn't think it was at least a million. And currently it's low. I think currently it's like 150,000 ounces at 15 grams. So they need to get lucky on drilling and Trixie. But if they can get Trixie to say, 70,000 ounces a year, um, that's, maybe $1 billion in Trixie alone. So I, I, I'm a fan. I think that one fits. If there was one that I would have knocked off the list, it would have been this one. But I kept it on. Ramelius is an Aussie 8 company. It's top 15. Excellent margins. A lot of gold. So I think it's sometimes easier just to come look at it here. So 1.7 billion. They have a lot of shares outstanding. Their balance sheet, no debt, 295. This is the one we want to look at. We want to look at their gold. 7 million ounces of gold, 300,000 ounce producer, and their AISC is about $1,000. So their break even right now, their margin, they're generating $1,400 an ounce, and their balance sheet is strong. So if they're generating that much and they don't have any debt, you can imagine 295. This thing's going to pop to 500 million really quickly. And then the margins, the multiple is trading at a 4 multiple, generating $400 million in cash. It's just ridiculous. So I have them growing from 300 to 350. So not a lot of growth. Prints right at the five bagger. But if the multiple blows out, it's going to even do better than that. But I want to own these Aussie eights because I think they're going to all kind of merge together. And so that's an Aussie eight. The next one, Regis, keep clicking on the wrong thing. Regis is another Aussie 8. They just paid off their debt. They have a strong balance sheet. They actually print as a 10 bagger. So a little bit better risk reward. I put Regis in the top 15 as well. I really like these Aussie 8 stocks. They're generating a lot of cash right now and they're not getting valued for it. They're kind of being ignored. Revival. Revival I like Revival a lot. It's a lot like Osisko Development. It's a development story. A long term. So Osisko, we got 2028, and I think Revival, they're going to build three mines. They got Mercer and Utah, and then they have Bear Track, which is an open pit and underground. So they have three mines to build, and the first one is 2027 or 2028. 2027. So this one, it's about 3 years out. So I guess development, the other one's 4 years out because we've got 25, 26, 27, depending on when it gets into production. But they have a lot of gold. Their projects are all economic. We're going to definitely get diluted. We got 221. Let's just hope this thing stays like south of 350. Ownership's strong, 30%. They're not going to give this thing away. They got plenty of gold, 5.5 million. So I have them growing to 250. But they got to build three mines. So this is a long-term one. So you might not like it. You might not like the long wait for Revival, but it's currently valued at 36 million. And so if you don't own it, you might blink and it's at 200 million. So it's got a lot of leverage at that low valuation. SSR Mining, I think that they're going to fix their problem in Turkey. I think they're going to get that mine back. Maybe they don't, but they just did a company, a third party just said that it's not that the problem, the slide of the heap leach field was not their fault. It was engineered incorrectly. So that's a positive. That basically says to me that they probably are going to be able to get their license back since it wasn't their fault. If they get that back, SSR Mining prints is a 10 bagger. I like the management team. Other than Turkey, I mean, they're mainly in good locations. And they have the one mine in Turkey. I think maybe they have two mines in Turkey. But I like SSR Mining's management team. It's basically another mid-tier 1.7 billion. Prince is a 10 bagger. Would I put it in the top 15? It's kind of marginal. I would say no until they get that mine back in Canada. Stellar, not a top 15. Another development play, another long-term development play. Um, but it's cheap. I mean, it's printed 105 million. They have 18 million ounces of gold. So at what point does this gold get revalued higher? So the PEA, they have two projects, you know, two big projects. And they're both very economic. And so each project is worth a lot more than $100 million. They have 18 million ounces of gold. So I have them printing five or producing 550,000 when they build both at about a 1400, 1450 ASIC, which I think that's very doable. It's going to even depends on inflation, of course, because it's going to take them a while to build both of these mines. Now, the one thing about these development stories like Stellar is at what point do these things just start ripping higher because they're just so cheap? I've seen this before back in from 2005 to 2011. Sometimes these development plays just go absolutely bonkers. Rubicon Minerals was valued at $2 billion, and they only at the time they only had about 3 million ounces. 3 million ounce development project was valued at 2 billion. This thing's valued at 100 million. So at what point do these development stories explode like they did back then? I think they will. So this is a combination optionality play when they're going to explode in value, and then you're waiting for them to build these mines long term. They have insider ownership at 30%, so they're not going to give this thing away. And their gold in the ground at eight is just silly cheap. So there's that Stellar. Skeena, um, Skeena is I have to put Skeena in my top 15. It's a high grade open pit in British Columbia that's heading to production. I'm worried about them holding on because their insiders are supposed to be 30%, but I just think it's such a quality project that they might get taken out. But if they get the first pour, um, this is a really good project. It's basically very economic, generating a lot of free cash flow. Plus, I think that there's two more mines that they can add on. They have Snip. They have, I think, under the pit, they have another high-grade underground mine. So Skeena is one of my favorite development stories with Next Gold. And so, yeah, that one's a top 15. Talisker is a high-risk dev. This is one of those ones I probably would have taken off the list, but it's got some huge upside, valued at 25 million. Thing about Talisker is they need to execute and ramp up production. So we have this long wait, and there's a risk people want to touch it. So they didn't do a PEA. So uh, it's which we don't like that, but we like the value, 25 million, and we like the gold in the ground. So they have 24 million in cash, no debt, but they could dilute us. They only have 109 million right now, but they have 2 million ounces of gold, and they're currently only producing 15,000 ounces. So I think this is going to grow to 3 million, and I think that this is going to grow to say 70,000 ounces, maybe more, but it's going to take time. But right now they're generating $1,000. That's a lot. It's a high grade, 6 grams. So if they get to 80,000 with this is 1650, so say $1,300 ASIC, um, the upside on this stock, trading at a one multiple right now, 1.5. The upside is a 35 bagger. So huge leverage for Talisker. This is one of the ones you roll the dice. Now they just have to execute. They have to, their $1,000 margins that they have right now. That we need those $1,000 margins at 15,000. Uh, so that's $15 million that they're going to generate this year. Hopefully that happens. That's about what 4 million ounces a quarter. I mean, if they can generate 3 million ounces, and they do that, if they generate 3 million, this thing they're going to start ripping, which is they're because they're trading at one multiple. This thing could easily double in a heartbeat. Okay, Tudor, keep hitting the wrong, clicking on the wrong thing. Tudor, so Tudor, they own 60% of Treaty Creek. It's currently 30 million ounces. I think it's going to grow to 35, 40. People were afraid of the refractory. I did some research on it. They can start, a third of it is non-refractory. They can start there. Um, They're going to drill this thing for a couple more years. You're basically paying $10 in the ground. It's an optionality play. Um, I have it as blue. I don't have it as green, but a top pick. But um, I, I, it's one of my favorite optionalities. But it's not a top 15. U.S. Gold. This one looks like a slam dunk because they're building it in a good location in Wyoming. I think they're waiting for one more permit. They're going to start construction this year. So you're paying 120 million for. I think the mine life's going to be at least 12 years, maybe 15. And so you're looking at 70,000 a year. I would put U.S. Gold in my top 15. It looks like I said, it looks like a slam dunk to me at this valuation. Um, Trading at $7. They have strong insiders. They're not going to give this thing away. Plus, they have a big project in Nevada that we get for free that they haven't drilled yet. That they're going to take all their cash flow and take it over to Nevada and drill like crazy. I also like the team. Vault Minerals. So Vault is Aussie 8. They renamed it. It used to be called Red 5. So this was the Red 5 Silver Lake merger. Definitely a top 15 stock. I have it as an A. So you don't see that there's not a lot of A's on this list. Well, there are a lot, but anything that's an A is kind of a top 15. But Vault, 1.5 billion strong mid producer in Australia, West Africa, excuse me, Western Australia. And so, yeah, I'm a big fan. So definitely top 15. West African Resources. This is kind of a high risk stock because it's kind of like Endeavor Mining, Orezone. So I have a few Montage. I have a few West African stocks. West African Resources, cheap, Prince is a 10 bagger, generating a lot of free cash flow, a strong management team, knows how to grow, aggressive. So it's a stock, it's kind of a stock that fits me. So I'm definitely there. Marginal top 15. Um, Probably, I don't, if I counted them all up, it might make the list, might not. It's marginal. West Red Lake Gold, this one's definitely top 15. This is one of my favorite development plays. They're actually a near-term producer. They're going to be in production um, first half of next year. I like the project. I think it's a growth story. Definitely top 15 stock. The last one here is West Gold. West Gold is a top 15. It's Western Australia. Doesn't print as a 10 bagger. Um, Probably should be a 3.5. Um, let's go and take a look at West Gold. This is the last one we're going to look at and we'll be done. So another 1.5 billion mid-tier producer, pretty good balance sheet, 95.31. I think they're going to pay this off pretty quickly. That's their printing it as a 6 multiple, 13 million ounces of gold, 350,000 ounce producer. The margin's about 700. So their cost a little high right now at 2050. But let's go and I wanted to look at the upside. So it's 803. So this one is definitely going to be a 3.5. I'm going to change it as soon as I get off the phone. Get off this YouTube video. They're going to a 3.5. 3.5. I'm going to take this down to 3.0. So these are going to flip, and I'm going to take this to an A minus. So it's going to be a 3.5, 3.0 A minus. And the reason why is because their costs are high right now, and their balance sheet. Before the reason why it was A because they didn't have any debt and their costs were low. So sometimes these ratings they don't stay accurate, and I have to readjust them. And and then whenever I do these podcasts, I always find a stock or two that are wrong. So West Gold. So there you go. There's my top 33 gold stocks. There's any stocks on there that you think should be there, let me know. So I'm trying to get this off. Doesn't want to go. Bum, 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 bum. Maybe I can do it this way. No, no, no. Okay, I'm gonna do it this way. I know I can do it this way. Stop share and